Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, May 7th, 2023, a little after 4 p.m. here on the East Coast. I'm Wayne. My partner Ryan got our market outlook, market overview out earlier today. I didn't feel well, so I'm getting to things a little bit late. And let's get into our just quick disclaimer and intellectual property rights notice. And then we'll get into the sector views. And it's another kind of downer, in my opinion. Intellectual property rights notice, if you could have a look at that. Then I'm just going to flash the macro measure program that I had this week. And I even simplified that, even though I covered a lot. There's the most important thing that I covered, if you haven't watched that or you're wondering if you should, would really, I think, be the tabs in my browser. I had a lot of really good things to share this week, in my opinion, that Ryan and I and Greg kind of accumulate during the week. I didn't share all of them. Hopefully Ryan put even more of them in Market Outlook, but there's a lot of things kind of arguing, right, that market developments arguing, hey, this market is likely to go higher based on history and different market cycles and things like that. On the flip side, there's a lot of really nasty stuff developing. And I think there's a lot of money that's already been bet on this third year in the presidential cycle. There's a ton of money in this market, I think, that's been bet on the bull side. And so I see two things there. I see either a lot of people having to scramble to catch up, which could create really powerful rally if we finally break out. And on the flip side, if those bulls got in there prematurely and they ignored risks that seemed to be pretty concerning, at least to me and Brian, other people, I'm sure, maybe a lot of you, they could be in real trouble and everyone will be headed for the exit doors and we could have a real doozy of a sell-off. So that follows. So just kind of, let me just rearrange things. So let me stop sharing. We'll get into our quick sector view, but that's really the big picture stuff. And the charts this week aren't all that awesome in I don't think in macro measure. There wasn't a lot of great stuff there, but in terms of the information that we were able to find, I thought it was really good. So that's why I spent a pretty good amount of time on that. Let's get the grid view. Oops, that's the wrong one. Stick with it right there. There it is. So I can start sharing again. So let me share the proper screen. We'll be back up and running. So here's the grid view that we typically start out with. And this is really why it's frustrating to a large degree. One part of that would be that, right, there's kind of been this risk off situation after the Fed, or with the news leading up to the Fed minutes, there was sort of risk off developing. And then Apple pretty much created a risk back on, mostly across the board. Right. So a lot of these sectors aren't acting too independently still. And I don't see like, hey, this is a beaten up sector. And now the technicals are starting to really shift and we should really keep our eyes on that. I just don't see anything really great leaping out again. And it's just been this way. And as I noted in macro measure, we've been trying to find a lean. You know, everyone wants really more than a lean. Most people, I think, want a forecast. I think forecasts are where people get in trouble. I think when you go and do all the research and put all the effort in, you want some kind of a payoff. And that payoff is the fact that you are strongly opinionated, you believe this is what's going to happen. And I think that can be really harmful to short-term trading because you are going to be slow to react if the expectations that you have are not being met. And in fact, you're seeing almost adverse movement to what you expected, right? So I try to be open-minded, try to be objective as much as I can. I still want to come up with a lean, a most likely scenario that I think is there. It's been really hard in April, and now even in the first week of May, it wasn't easy. And we just said we knew that economic calendar, that earnings calendar could wreak havoc, and it did. And so now we're through that. We still have NVIDIA coming up in a few weeks, but most of the big things I think are out of the way for the most part. And hopefully now the market has a chance to trade in one direction or another away from the Fed, which is 5 weeks away. And hopefully we'll get something that's more a trend or something in one way or the other that's just more on its own, right? It's standing on its own two legs. But energy was a big leader for a while there last year, but you could see it's overall, right? It hasn't been having a great year. And in fact, we might, after it rallied on Friday, it might be back into if this is just a little rally that fizzles, a little relief rally that fizzles, which it could be back to challenging those lows we saw back in March. And that has its own unique factors, right, that you have to pay attention to if you trade in there for sure. But everything does, but definitely that's the case in my mind with energy. But yeah, I would say, look, that's not a good sign when energy and financials aren't really doing all that well. And we're not seeing anything special out of transports right now either. So those are three big areas that I like to keep track of that are telling me that, yeah, the economy's doing this or that. I don't think we're getting anything great out of those, right? But we are getting still defensive positioning in XLP, right? So the staples continue to hang in there close to the highs, whereas the discretionary, our consumer discretionary, is far, far off the high still, which is interesting, right? But that could be, that this thing is sort of coiling up. I could see some stored energy in there right now. And so maybe, right, we're on the cusp of something finally. But this still looks very strong. And I guess Dollar Tree would fall in that. And I did mention that in macro measure. I mentioned it in cocktail hour, the Dollar Tree would fall inside of that, I guess. So that would be interesting, kind of a strong spot at the moment. Maybe it gets stronger. I don't know. But XLK is another area. You can see the RSI readings we're not really close to overbought anywhere. We're somewhat a couple of them were on the low side of 50, but not most of them are either near 50 or in the case of XLK near 60 and XLP 63. But you're kind of like getting these middling readings. But this XLK looks interesting right now. Look at this, right? This thing's really, really hung in there. In fact, it made a new high on Friday. So if we go back and look at, I don't really want to do this too much here, but this could really, if this breaks out, right, this could start working its way back towards levels that we haven't seen really since the bear market got underway early in 22. So I just wanted to flash that. So I think that's one to keep an eye on. I think the stock that we saw earlier, NVIDIA, obviously an important stock these days, maybe even more important than I realize for all I know. Maybe that's why they're so ecstatic and not letting things go, because they can still work with the still work with the NVIDIA to really help goose the market even further. But this is the one I'm mentioning. Let's take a look. I got to do it over here though, I think. Let me take a look here at XLP and see what component is in there. Let's see if they can give us that quick. Nope, we're not getting that. That's more that. So that's not part of that, or at least not in the top 20. So a lot of the things you'd expect there to be, right, with Costco and Walmart in there, Target, of course, as well. So yeah, that makes a lot of sense that those are in there. Colgate, I guess Pepsi, I guess Coke and Pepsi. Yeah, I guess Procter and Gamble. That all makes sense. But yeah, so DG's in there, but not at least in the top 20. But Dollar Tree is not. But it's kind of in the same space. I think we can agree to that. And what I'm looking at here, just to kind of, and I'm looking at the wrong chart. On this chart here, this is the one I wanted to look at. It's a lot more easy to read. So this one here, it's been in this triangle, and it's been kind of a wild trader over the last year, but it just worked its way back above and out of this triangle. And it found the 20 on that market swoon we saw midweek after the Fed, and then reversed big on Apple. So kind of this little mini megaphone developing in there right now, this kind of like mini broadening range. But this thing starts to go, there's a gap fill back here. It's held on, right? If we look at where it got to Friday, it's really held on to most of its gains. So just kind of like a little bonus for having to endure sector situation each week, that I would keep this on my radar if they find a way to continue to move this market up and this thing starts to break out. And it might even have a pre-earnings catalyst that it can use, or maybe they'll buy this in anticipation of really good earnings or forward guidance or whatever. Don't know. But I just think the potential's there, so I wanted to mention it. It's really been kind of stalling out in terms of volume, and then a little bit picked up there. So just nascent signs that something could be brewing. Don't jump in at 9:30, .01 on it, but you get the idea. There could be something brewing there. So let's take a look. We'll go through. Let me get my 12 sectors and move those out of the way. And we'll kind of go through them methodically here on a bigger view so we can see if we can come up with anything. I'll just go right down the way they are. XLE, right? This one, I don't really, this is kind of an indecisive candle. It did work up. This is kind of like the overall maybe relief rally in the whole market. But I mean, I'm not super impressed yet. Could it get back up towards the descending 50 in gold? Sure. But it's below all the SMAs right now. I could see this thing still trying to test lower. That's kind of muddled at the very best right now. And you can see the intermediate term is more of a downtrend. And that makes sense, right? With the SMAs, like the 50 recently crossed below in gold, recently crossed below the 200 in purple. I mean, this is not the kind of thing where I'm instantly getting long. This is quite the opposite. I'm really looking probably more for short biases, but who knows what kind of news is impacting. But it just doesn't bode well for the macro situation, right? That energy is on the ropes potentially, and you've got an unfilled gap here, just as a reminder. So not a lot to love there. We'll just go down in order here. As we noted, XLK, right? This one is looking really good, probably as good as it's looked in a while. It really wouldn't take much, right, to break out to new highs that we haven't seen since the middle of last year. So that's there, and it's not at the upper Bollinger. It's got NVIDIA, so keep an eye on those two things. This could actually be a decent trader. The last time we traded it, the options weren't all that great in terms of liquidity. It was a little underwhelming, but maybe it's gotten better. In fact, let's take a quick look at the XLK on the options basis, and we'll look at next week's contracts. Yeah, and you can see what I mean. Now that could have been closing out, so it might not even be worth it. But if this is indicative of how these things are during the day, not during the trading session, it's not worth fighting in that way. If they tighten up nicely, it's a different story. That could just be market makers, withdrawing their markets towards the very tail end of the day. But anyway, that is at a 60 on the RSI, and it's got room. It's holding all the moving averages. Most of those are upsloping, and it would take a nice little pop, probably 3% or so, for it to hit the upper Bollinger there in red. So I don't hate that at all. I mean, I think that's a nice bullish profile. The only kind of negative creep we can add to it is that this was done on Apple News, which again, that's reality. And it could have a little mini double top, but that's really getting ahead of yourself, since the way that it closed was pretty strong, right? And it's above like all the short-term SMAs that are bunched up and holding. They're kind of still holding really a slightly positive slope, it looks like, at the moment. So overall, I mean, if you forced me to make a call on that, I'd say, well, yeah, at this snapshot in time, it has a slightly bullish profile to me. The potential's there for that to make a run and maybe challenge that high. So something to keep an eye on. I mean, technology is so important. We know that these days. It's been that way for a long time. XLC, the communications, right near 50 on the RSI, nothing special. Didn't really get back and respond the way other things did. But again, lagging behind maybe XLK, but right, it's above almost everything as well in terms of SMAs, has room to go on the Bollinger. RSI, right near 50, right middle of the road. Could this do something? Yes. And if not, right, you have this official gap closure if it goes down. And of course, beyond that would be checking out the 50 SMA. But again, this is why it's so hard right now to say, yeah, the market, here's what we need to do. There's a lot of things that just do not look like they're at junctures where they're interesting, imminent trades, right? Something we could focus on right away. You would need, I think, at the very least, to have hopes of something more than a day or two, that you get through the downsloping 50 SMA there in gold in the XLF. Until then, right, you've got to look at this and say, this is intermediate trend down. right? And you have a gap and you wonder about, this was all on a rumor that got floated. So, or at least that was what was reported. So I don't know if you can be all that ecstatically bullish right here. If you are, great. I mean, it's not like it's the worst chart I've ever seen, but I'm more of a believer. Let me see some momentum develop in that direction before I start buying really aggressively. I certainly wouldn't there. I'd rather see this thing right the ship a little bit more. So I think that looks a little muddled. I mean, one good day doesn't make an uptrend. So to me, like and that day was really that was almost like an across the board up day, pulled off by the usual suspects. Real estate treading water for the last 5 weeks at this point. So again, what can we say? Like, that's not really saying much to us about the market at large. Maybe it will get better somehow, despite my concerns. You still have an intermediate term downtrend. All of your SMAs that are longer term are really downtrending, except for the 50. So that's nothing special. If it takes out the 200 and the whole market's starting to really celebrate, and it appears to be something more than just another short squeeze, maybe it's a different story. But right, you're just near 50 something there, low 50s on RSI. Again, nothing really astounding that we can work with there. XLV might have a little bit more interesting of a look to it, because if we drop a couple lines on this thing right about there, if I can get that one just laid in there roughly, then we could put another one sort of here. This does sort of look like, right, a nice little corrective phase that followed this bullish phase here. So the fact that it held kind of at the middle point, held above the 100 right there, and tried to work its way back up, this could bust out. Now, I think there's a flat line right near that, call it 134.50-ish. And then, of course, you've got highs to take out, so on and so forth. But this one at least is showing a little bit more where it could be in a spot that would allow it to do a little bit more. So remember, if they find a way to keep the squeeze going, this is one to me that if it does, let's say, take out last week's high of 134.90, that could be interesting, that it starts to go again and maybe leaves this corrective phase that it's been in for the last 4 weeks. So I'd keep an eye on it for that reason. But again, I'm not blown away by that. It's not like it has a perfect setup at the moment. XLP, this is the one we already talked about, but right, this is really holding its trend, and both the short and long terms are upsloping in terms of SMAs. So it's 63, so it's a little overdone, but it's certainly corrected from where it was. Back in here, it closed that day with a 71, almost 72 RSI reading. So backed off in a healthy way, held the 20, started responding when the market did. So again, this would be another one where probably gets a little bit more towards overbought if it attacks this high. But if they create a squeeze, another round of squeezing, then you could have something there that could, I would again be more of a roller. When I start out in something that can still go, but it's got high readings to begin with, I'm going to be more of an aggressive roller while I'm in it, rather than someone that just stays in an 80 delta call. I'm sorry, something along the lines of an 80 delta call. Anyway, I just drew that line in there to kind of dovetail it with this line here. So it's just a lot like what we just saw in the XLV. It's a lot, this is longer term in duration, but you get the idea of a nice bullish phase, corrective phase, and then you sort of stall at the middle of the whole channel, put in a higher low, and then you have a chance to break above a lot of different things and go. That's what it did. Just wanted to kind of highlight that for folks that are, these are things that have helped me over the years, little observations like that. XLY, this looks interesting to me because of the same reasons we just talked about, right? Really, the major trend that catches your eye in the short term has been this big thrust that it had up, goes into this corrective phase that it's been in. It's been hard to make heads or tails out of that for a while, but it's holding higher lows really, and it could try to break out and start getting, it's a lot closer to breaking out than breaking down in a real convincing way. I think to get a breakdown, you definitely, of course, have to take out at least a low or something like that, which would be down about probably about 2%. It would have to go down before you could think about that. But you really would want to see the 150 and the 100 broken to really think this thing's in free fall. But that is closer at the moment towards a possible breakout attempt. So might want to look through those names to see if there's anything that catches your eye. Transport's another kind of part of the mix where not that impressive, right? In the sense of this is not really doing much. It's hanging in there, but along with energy and financials, what could we really say? And those are three really key sectors that just are not firing right now, which concerns me in terms of the macro picture that paints for me, that all these things are not really acting as though we're having a soft landing and there's great times ahead. They're all kind of acting, I guess you would say, moribund at this point. There's nothing really all that wonderful happening there. And so I consider that a little concerning longer term, unless these things start to right the ship. Basic materials, that was the leader for a while, but it's definitely been consolidating the past few months. Does have a higher low put in, use the 200 for support, could try to break out if this line here gets extended over, could try to do something a little bit more. It pretty much needs to get above the dashed white 100 SMA, which is exactly really where this resistance line is right near. So that's just for starters, right? Then you have another one waiting for it up here. But to really start feeling much better, you probably need to be up here through that line. But you could take a trade if it can get from there to there. But it's not a big mover, nothing all that wonderful anyway. But overall, right, holding the 200, SMA is sort of starting to flatten out, has a higher low or a group of higher lows put in versus this low. Now it needs to do something with it. If it doesn't take this high out and just rolls over again, then we're still sticking with that intermediate trend that's down essentially for now. But I mean, that's another thing that just doesn't say, hey, yeah, we're rocking and rolling, and neither do industrials at the moment. They're still stuck in a consolidation. A lot of these things are right near 50 on RSI. This is why it's so hard to do these videos that I do. We had a really, I mean, a great run, I think, from the start of 22 through the first quarter. Mostly we had a lean and we had some good things we could focus on, but the last 5 weeks have been hard to find great things to really say, hey, look at this or look at that, to try to help out a little bit. I don't have much to say. I mean, everybody can see that the frequency of the oscillations are kind of getting a little bit faster up and down, but the amplitude's dropping. So yeah, you're getting a triangle. I mean, everybody can see that without me even drawing it. I'm sure a lot of you thought right away there's a triangle unfolding in there, and there does appear to be one. So the only good thing we could say about that is it's getting close to the apex, and maybe something will develop in there. But those are the ones we'd also just kind of throw in the XLU, because utilities are in a way important, but again, they've done nothing for the last 5 weeks as well. And they could look like world beaters above the 200 if they take out highs in purple, and then these highs, and they could start to run. And very quickly, right, they could look like they're headed for the poorhouse if they break down below the 50, which would be the last of the SMAs down there. So again, I don't see anything special out of the normal stuff we look at. In terms of other things, we did look at SMH even in macro measure. I do think this does look interesting. So I think you should definitely train your sights on that. That, to me, if they're going to sort of force this rally to continue somehow, which they could, this one to me is one that you could keep an eye on. Has the higher low put in, bounce right above the 100, could easily take out the recent high. That could produce at least the start of a run. So that could deliver a little something. So keep an eye on that one. That's probably one of the better looking things. And you can tell the intermediate trend is up in there, right? So that's not too bad. One other one we've been looking at lately is XBI. And we've caught this a few times and kind of noted it was doing better. So I didn't even realize it had such a really nice move there by the end of the week. I did not realize it had such a nice week overall. But now that's above your 200 and all the other SMAs. So maybe a lot of the easier money's been made there. RSI at 63. But this could have more room. I mean, I would just be a little concerned about the short-term RSI because my gut instincts tell me that something like the 1 hour, 2 hour is going to be in the high 60s. So you might need to chill there for a little bit before maybe trying to go again if that's what it has in mind. So short-term overbought, longer term still has, I think, room to run if they want to take it somewhere. Cycles wise, though, that's definitely improved. I don't think it's not perfect where everything about it's wonderful, but the time cycles I like to look at look pretty good. And you would expect that to be the case, right? Given what it's been able to do over the last few months. So that's another one we've been kind of poking our heads in and to take a look at. XHB, just resilient, again, kind of like in my face resilient, because I still am scratching my head how this is possible. But again, I'm not shorting it. So I'm just saying, and I don't really go against the trends. I don't like to. Possible longer term double top, as we noted, I think last week. You can see the two rectangles there. Could break down easily, but look, it has rising SMAs. There's really no reason in my mind, right, that you want to start wailing on this right away. I mean, the way that I like to trade things, I would want to see some loss of support, like the line I just drew. That may as well be your 15 SMA there in red, 69.57. At the very least, that. But then your low right here is probably just below there, and it is 69.44. So I'd want to see that low maybe get taken out, and then maybe you think you could get a trade to the 20. You get a roll in, maybe it intensifies, you fall to the 50, you get another roll in, it keeps going, you roll again once it gets to the 100, and then maybe it comes back and closes this gap. But that would be in the double top scenario. Could be possible, but again, it could also be right near a breakout level very easily too, with just a couple of good days. Because the Fed, if someone decides that the Fed's going to even reduce rates further, they realize they've made a mistake on the last hike, whatever kind of stuff, just like they floated the regional banking issue is going to be addressed and solved. For all I know, the over the weekend news says it is, but I didn't catch it if it did. Here's the metals. We've been noting that they've got this massive cup and handle that goes on a big picture basis. I'll try to show that. And it doesn't look that wonderful there. Probably have to flip over to SLV and GLD. And maybe we could see it here. This is really big picture chart stuff, but these kind of things matter in a big way if they ultimately matter. If they ultimately matter, I've seen this happen many times, and you get these patterns that are just on big picture charts like they are in gold and GLD, I should say, in SLV. And if they break out, it could be really a strong breakout. Of course, I did show JP Morgan betting against this. They've been known to suppress these markets. It's almost as if they've got the government's approval to do so, given how much money they make through suppression versus how much money they pay when they're caught and fined for suppression. I kind of want that part of that action if I can get it, but I don't think they're going to let me. Anyway, let's take a look at the futures a little bit. We'll take a look at the oil future. And there it is. And this is too big picture. We need to get back to a little bit shorter term than the last several years. So we'll get back to there. You can see this got overdone, but I mean, this really followed it. We've been saying this for a while too, that we couldn't figure out, one thing's got to give, right? Oil futures were not really acting all that well. Will they give, or will the XLE win out and oil futures will kind of catch up to how XLE was performing? But you can see this has really been a downtrend, right? For a while, maybe, right, the very nascent ingredients for a double bottom. So keep that in mind. Got back inside the Bollinger Bands. Bollinger Bands aren't particularly wide right now. Below all the SMAs, the shorties are declining. Most of the long terms are declining as well. So I think you have a challenge picture there, despite the big reversal from Thursday's low to Friday's high. But, this is a news-driven situation, so you've got to keep your eye on that. But I mean, that is not telling you, hey, there's a lot of energy demand out there because there's a lot of expansion or ramping up of production or what have you. So just a note there on the macro side, Don't think that looks all that compelling. Let's take a look at lumber as well along the same lines to see if we can see anything about lumber that can say, hey, things are getting better, and a little bit better of a week, but you can see where lumber is overall. It's way, way, way off the highs, and Thinkorswim's doing the percent change on me that it does. So, you're way, way, way off of the highs from earlier this year. So that's not boding. I mean, maybe we get a bounce or something like that, but I don't think you're getting anything great out of that. Copper, we've been looking at copper for the same reason, and it doesn't like that symbol. I picked the wrong symbol there. Let's see if it gives us something else. Yep, and copper's doing the same, right? You're just not getting what's there to say about this. Right? There's not really much to say about it. I mean, this is not something that I'm looking at right now and saying, wow, there's a compelling trade. We really don't trade this anyway, but right, what are you saying about economic activity? This is normally something you would expect to be really working out well if you're really doing something strong in the global and domestic economies, but you're kind of in nothing special land, right? You're kind of in nothing special land. So again, I don't see anything that's really lighting it up there. What else can I cover for us that I'm trying to think if there's anything I can try to share? We did talk about VIX and stuff like that. I mean, but in macro measure and the dollar, we talked about yields there as well. Gosh, maybe the real estate. So I've got to pick a position in here. I'm taking something. It's a low risk position that I plan to morph if things really deteriorate. It's not an enormous position, but it's a decent sized position that I've taken here, expecting there to be more trouble. I did flash something. This might not be directly related to this ETF, but if you look in macro measure, there's the occupancy even a couple of years later is from pre-COVID. Pre-COVID, you're at versus now. So 2019 versus now, office occupancy is half of what it was. So I don't know how all this plays out. That's certainly not any space that I'm an expert in or anything close to it, but I just don't see how this situation with inflation and rates and that kind of situation, I just have a hard time with these real estate a bull. However, right, for now, right, you had this longer term downtrend, you had this strong push down that we saw. It's bounced and it's been consolidating. It could break out. You would say, well, there's a higher low put in. Maybe it's trying to change trend. Maybe it's trying to pull off another one of these types of maneuvers. Maybe, but at the same time, right, if it breaks down, we do expect it to probably come back and probably be on its way to testing those lows, given that what would drive it back down is probably the kind of news we're already aware of, just updated. Just things aren't all that great there, potentially all that great. And again, the trend is down, but you have to wait. This is the problem with the last 5 weeks of sector situation macro measure. We've just been stuck. We've been stuck, and we've got through the Fed, we got through the mega cap earnings. So hopefully, right, between now and the next Fed meeting, we'll get some earnest movement one way or the other. And I don't care what it is. If it's more short squeezing, as much as I sort of laugh and sort of sneer at it because it's so brazen, and it's just it's what these guys do. It still gives us a lot of opportunity, right? We can still do very well in it. So I don't really care. And in fact, I really, despite having bearish positions on, I'd love to be dead wrong about those and be more of a bull on the charts and say, hey, we have some room to run and we can get some really good, get some really good returns going. We had some really nice returns in UOA, in the banking area, in KRE there, and a lot of those names associated with the regional banking. So that would be really, that when you get this kind of waterfall and then some individuals that have really slid off, it's great. It's great. But this has been an exception. Most of the market hasn't been it hasn't been delivering that kind of magnitude and sustained movement over the course of many, many days in a row, because most of the time we've been stuck in so many stocks, so many sectors, even in the major index ETFs, largely with this kind of stuff, which is tough to trade. I mean, for momentum traders, you're getting your singles and doubles. So it's just been hard, but we just have to keep doing the best we can with what they throw our way. And that's what you have to do every week. That's really your goal. Just do the best you can with what they give you to work with. You can't do any more than that anyway, right? So that's what we try to do. So I hope something I was able to share with you this week will help you this week or another week in the future. I want to say to everyone, thanks for tuning in. I really do hope you got something out of this. Macro measure, the charting aspect towards the end, maybe not that interesting this week, but a lot of those browser tabs that I covered with the opposing factors, it's just kind of a smidgen of what's really out there, but it's pretty interesting and it might be worth a look so you kind of have the right idea about the back burner and about how you should maybe be handling some of the longer dated risk that you're carrying in your options portfolio. So on that note, wish everyone a great conclusion to their weekend and a great trading week ahead. I'll be in touch through updates and I'll of course be in touch through videos next weekend. Thank you.